Hey there guys, and welcome to another video. And in this one we have another interview, and I just want to do a short message to explain a little bit of context about this particular interview and a little bit of background about what actually brought it together. So Simon Dixon's team, they reached out to me probably a couple of months ago, so this interview has actually been quite a bit in the making. And you know, when they reached out to me, I didn't know a lot about Simon before, but when I looked into him, I couldn't believe how long Simon has actually been in this industry for. It's so amazing, in fact, that Simon actually was one of the first, if not the first person to ever include Bitcoin in a book. So Simon wrote a book way back, I believe, in 2008 or 2009 called Bank to the Future. And Simon's traditional economic and financial background is what really positioned him well, learning about Bitcoin and then coming into the cryptocurrency industry very, very early on. So Simon's actually been in this industry since 2008. Now Simon's also behind Bank to the Future, and it's like kind of a crypto crowdfunding platform that have invested into companies like Kraken, like Bitfinex, like Shapeshift. So Simon has a wealth of experience, and much like the Tom Lee interview, because he's come from a traditional financial background, that positions him extremely well in terms of how he sees the future and how he sees this new disruptive technology such as Bitcoin and cryptocurrencies playing out over the long term. So that's why I really wanted to do this interview with Simon. And what you'll find in it is I don't really do much of the talking at all. Simon just educates us the entire time. He's an absolute wealth of knowledge. And he just gives us so much information, so much incredible education on finance and on cryptocurrencies. It really just, we're extremely fortunate to have had Simon on the show, and we're incredibly lucky that he gave us so much information in this interview. So that's a little bit of background about this interview, about the chat with Simon, and I really hope you guys enjoy. So a little bit about Simon's background. Simon, you're an economist. You hold degrees. You got a bachelor's degree and a master's in economics, so you know you're very well educated. You've worked in the banking sector in the UK, you've been a stockbroker, you've been a market maker, you've worked on IPOs, and you've also been involved in the crowdfunding space as well. You're the author of 3 books, Student to CEO, Bank to the Future, and I believe you are a contributor to the Great British Entrepreneur's Handbook. You're the founder and CEO of BnkToTheFuture.com, which is like a crowdfunding platform specifically for crypto and fintech companies, which to date has invested over $500 million, massive amounts, into companies like BitPay, Kraken, Uphold, Factom, Ethereum, and Shapeshift. So really been around this space for quite a while. And you know, now you're a Bitcoin and cryptocurrency evangelist. You're an educator and you're a speaker as well. You really get around and you've spoken at a lot of conferences. So Simon, that's a bit about your background. Mate, thanks for coming on the show, and we really appreciate your time.
All right, thanks for having me. I haven't been called an economist for a while, but yeah, it's interesting to hear that.
Yeah, well, look, like I said earlier, the people we really like getting on these shows are people with that background, because I think there's not many of you from that traditional world that have now come into crypto, especially so heavily. So I think certainly for me and the audience, why don't you tell us a little bit about your background from your perspective? What initially got you into cryptocurrencies, and what was the point where you thought this is the future?
Yeah, sure. So, I mean, I guess it probably all started from the economics background. When I studied economics, I really wasn't satisfied with what I was learning. Traditional economics teaches you about 2 main schools of thought, which is the monetarist and classical school of thought and the Keynesian school of thought. And both of them actually make fundamental misunderstandings and ignore the true nature of how money is created. They all believed in economies based upon spending. One of them believes that you stimulate an economy. The monetarist and classical believes that you stimulate economy by not taxing people and allowing people to spend lots of money. And the other believes that you stimulate an economy by spending lots of money through government, fiscal, and monetary programs. And then there was this tiny little school of thought called the Austrian economist, which again was mainly focused on gold, but then gold was kind of outdated because money used to be backed by gold, but then you could create as many receipts for gold, which later became traditional money as you wish. And therefore, the gold backing really was always going to be defaulted and fall down as governments have more agendas. So it was that study of sound money and the history of money that really brought me and drove me to initially, I don't know if you had the same experience, but when you when you go to university, you kind of you're driven and you're trained to work for someone. So my initial thought was always to work for an investment bank and get into the financial sector. So I did that. I started as a T-boy, worked my way up to working in the City of London as a market maker and trader, and then doing corporate finance IPOs. And really, it was around about 2006 that I realized I just wasn't really fulfilled trying to, speculate my little piece out of the market and give it to the investment bank. And so I decided to throw the corporate the corporate towel in and just set about giving presentations and really studying deep into money and the things that interested me before working at the bank. And it was that really that drove me to really digging deep into how money is created. And I did a lot of blogs. I presented at a couple of hundred universities on the subject of money creation. And you've got to remember, this was 2006. And in 2006, we were at the end of the biggest bull market in traditional finance history. And nobody was interested in the message. But I started to publish the thoughts behind my first book, which was Bank to the Future. It was mainly talking about the problems of money and how that was going to lead to a really a problematic time ahead. I didn't really forecast a global financial crisis on the scale it was, but I was talking about the subject and that we had really challenging times ahead. And to not go too deep into this, but I was talking about three problems with traditional money and how economics had forgotten these problems and built all economic models without a consideration of these problems. But when you deposit your money with a bank, the bank becomes the legal owner of your money. And when they become the legal owner of your money, they also spend it as they wish and dictate where all money flows in the economy. And finally, all money is backed by debt, and it's no longer an intermediary between banks, are no longer intermediaries between borrowers and lenders. And the banks are actually responsible for 97% of the entire money supply, and governments have outsourced money creation to the private banking sector. And these subjects were pretty controversial at the time, and no one was really interested. But in 2007, a little event happened where we had the subprime crisis in the States. I was in the UK at the time, and then a bank called Northern Rock went bust. And then suddenly my lectures were really well attended. My book was, my things were just interesting to people. And then a real interesting turn of events happened. Sorry, it's a bit long introduction, but I think it's interesting to hear. Is that I met someone, I was presenting, I think it was at Occupy London or one of the other events. And somebody came up to me and told me about this thing called Bitcoin. And his name was on Twitter at the time, I don't think he's on it anymore, was Johnny Bitcoin. And Johnny Bitcoin actually quit his job, sold his house, and moved into a squat in London to work with some early developers in Bitcoin. And I was intrigued by why he would do such a thing. But he went all in and was living in this squat, working with some of the developers there. And so I was writing the book Bank to the Future, so I decided to write and include and really research this new monetary policy that was popping up. It was very small at the time. I think, I can't remember exactly, I should look it up, but I think there was less than $1 million or $10 million a market cap at the time in the entire industry. That turned out to be the first published book in the world that included Bitcoin. And so from that, I was invited to the very first Bitcoin conference in the world to speak on the difference between Bitcoin and banking. Now, that was in Prague, in what only could be described as a crack den with about 20 computer scientists and 20 activists, where you had to knock on secret doors in order to get into the hackathon of the after party. And it was a very interesting experience. But then from that moment, I remember it was Bitcoin crashed to $3. It was sponsored by Mt. Gox. There was a little startup pitching called BitPay, which was Tony Galippi pitching his concept. And I was giving a panel with Max Kaiser, who was the first TV show to actually cover Bitcoin on mainstream TV when it was about $1, I think. And so that's really, and then started investing in the industry, built the platform BnkToTheFuture.com, which was just dedicated to investing in the industry. And now I'm an investor in about 100 different companies and through Bank to the Future. We've invested about $500 million in the industry and just been watching the trials and tribulations of this industry grow, and hold a belief that we are currently in the most interesting time in financial history. Bitcoin is the world's best shot at sound money that we have ever seen. And other disruptions are coming, and every single area in traditional finance and financial applications are all going to be challenged and disrupted by this technology. And that brings us kind of where we are today.
Wow, truly fascinating stuff. I could spend hours picking your brain as to some of the stories you probably experienced and some of the events you probably experienced being in this for so long. And what credit to people, not only like yourself, but to the developer who quit everything to work on, Bitcoin and other cryptos that early. I mean, it's funny, people around us now still think, a lot of the population doesn't know about cryptocurrencies, and they still think that this industry is very, very new, which it is. But going back that far, I mean, that's truly astounding. Now, because you have been in this industry so long, I mean, you're so uniquely positioned. How has things changed from back then to today? I guess in terms of the industry, in terms of the sentiment, in terms of the market participants, what are some of the biggest things that you've seen? Some of the biggest changes?
Oh, so much. I've never known an industry where pretty much every 3 months, whatever your current thinking is out of date from the next 3 months. This industry has moved so fast, but I remember the really, I think the major change that has happened was, back in 2011, there was just a very small group of people that knew about this thing. It was really mission driven. The people that were involved in it were really, really around, to create sound money, to make disruption in banking, and create a more honest monetary system that was censorship resistant. Now, over time, obviously, as we grow more and more adoption, the speculators came in and people realized that sound money is actually probably, if this succeeds, going to be the highest return investment that we've seen for such a long time. And really, you got lots of speculators that were driving that in, and then you also had obviously the dark markets, where the first user cases of censorship-resistant money came in, where people realized if you can have money that people can't control, then you can actually buy things that government may not want you to buy. And then, companies like BitPay come along, and they created a legitimate way for businesses that weren't, that were able to convert their Bitcoins into fiat and accept transactions. And then you had these two-tiered markets where you had people buying it in order to buy things that the government didn't want you to buy. Followed by legitimate businesses that were selling it, and that created this equilibrium market. And then, we had things like massive counterparty risks being introduced, where essentially Bitcoin went from this peer-to-peer protocol to introducing these large exchanges, where Mt. Gox had about 70% of all the Bitcoins on their exchange. And then we created essentially a bank again, where people couldn't own their own money, people couldn't spend their own money, and there could have been fractional reserve within that exchange ecosystem. And then I think what really happened was some of the major changes was as Bitcoin started to really see the properties of becoming sound money, as more and more people started mining it, and it really looked like this was something that the governments couldn't take down, because in the early days they totally could. It was very easy to get hold of all the miners. It was a very centralized system to begin with, but it became more and more decentralized and really created that ecosystem where the developers were competing with the miners, and the miners were competing with the users, and the users were competing with the businesses, and really getting to that point where actually we did have a completely censorship resistant computer that could not be shut down by any government or anyone. And when we realized we had reached that phase where this was the largest supercomputer in the world that was unstoppable by any government and any a significant amount of resource to take this down, watching the banks scramble around and use the word blockchain in order to try and propaganda and take away the word Bitcoin, and the banks trying to take that over, and the corporations all using the word blockchain. And then we had this big rush around blockchain, and it completely backfired, because the only blockchain that worked was Bitcoin, and everyone was investing in Bitcoin. The more and more the large companies and banks propagandaed the word blockchain. Then the Bitcoiners invested in Ethereum. They were trying to do the ICO concept. It was originally Mastercoin that tried to do that on top of Bitcoin, realizing that technology might not be so appropriate for smart contracts. And then Ethereum, the Bitcoiners funded Ethereum. You have to remember this whole argument between Ethereum and Bitcoin. It was completely funded by Bitcoiners, the original ICO. And then the birth of ERC20 that came like a couple of years later, where anyone could create a token. And then you kind of had 6 investment waves through that whole thing. You had originally Bitcoin, which was sound money. There is no competitor to Bitcoin in my eye. It is sound money. It's the only decentralized thing, and it doesn't compete with anything else in the industry that has more centralized properties. And then you had altcoins that were trying to improve, and that created another investment wave in the industry. Then you had equity and equity in companies. So we were investing in a lot of the equity, and at Bank to the Future, we launched a platform where people could invest in equity in companies like Bitfinex and Kraken and Bitstamp and all the major companies at the time. There was only Bitcoin companies. There was no blockchain sector then. And then you had tokens and ICOs, and then you had hard forks. If you owned Bitcoin, you just got free money as a result of people trying to hard fork and make improvements to the protocol and create their own tokens. And so you just got dividends as a result of that. And then I think the next wave is securities tokens, which we're just seeing the very, very beginning of right now. So I've seen all these waves and flows, and the crypto market really never ceases to surprise me as it throws new things in this really disruption of the financial markets.
Yeah, it's super interesting. And touching on the point you mentioned at the beginning there about how dynamic and rapidly changing this industry is, I feel like cryptocurrencies, I said this on Twitter the other day, has got the highest density of intelligent people in it of any industry I've ever seen. And you're constantly challenged to really be on top of your game. And because it moves so quick, I find I just have to always be researching, always be studying. There's no point where I ever feel like I'm on top of it in terms of, because things just move so damn quick.
Yeah, so I mean, and that was the major difference in 2017. I think in 2017, wherever I went in the world, no matter how obscure the country was, or small the country was, or small the island was, wherever I went, pretty much everyone that I asked had heard of Bitcoin. They didn't necessarily know what it is. They didn't really have an understanding. They might have thought it's still a Ponzi scheme, a currency just for drug dealers or something like that. But everyone that I speak to has heard of it, and that is universal. And so that was really the first adoption phase of getting the entire world to know about it. And really, as we go into bear market in 2018, as the technology gets better and better and better, and as the applications get better and better and better, it's now about really increasing people's understanding that they've heard of it. And then the financial system making things worse and worse and worse for people with their traditional money, that is driving people to want to look at alternatives, own their own money, spend their own money. And as the economy gets worse, people start to realize the benefit of having sound money and a portion of your savings. And fund managers are realizing that right now as institutional services get down. And we really are going through the next wave and the next phase where the entire world, no matter who you are, can benefit from having sound money. And I think the final wave is that I already think is happening right now is when smaller central banks start purchasing Bitcoin as a hedge against the larger, more important currencies. And then you have a game theoretical problem where Bitcoin could end up being the world reserve currency as a result of large central banks not wanting to be caught behind of the smaller central banks that have purchased Bitcoin and have increased their purchasing power so significantly, like they did in Bulgaria, where their Bitcoin position was greater than the national debt, that every central bank has to adopt a Bitcoin standard, which is what I'm pretty excited about happening in the decades ahead.
That's incredibly interesting. Touching on the banking side, so you established Bank to the Future. So you've come from this traditional finance world. You've had this insight early on to see where things are going. What was the inspiration behind Bank to the Future and creating this, this crowdsourcing platform?
Yeah, so the story behind Bank to the Future is that it was 2010. We were in the UK, and at that point, companies like Kickstarter and Indiegogo were pretty popular. And there was 3 companies in the UK that wanted to take that concept and apply it to traditional equity and kind of do some disruption in the venture capital market. Bank to the Future was one of those. The challenge was no regulator in the world would recognize online venture capital as something that could be regulated. So we set up a bit of a lobby group, the 3 companies that were looking to do this at the time. And it took approximately 3 to 4 years to actually get the first regulator in the world, which was the FSA in the UK, to actually register a company for this type of form of investing. And so when we were added to the FSA register, in the meantime, it took so long that I was, throughout that whole time, we were involved in 4 years in crypto is like a lifetime in the world, really. And so the market had moved on so much, but by the time we had actually got our registration, our crypto investment had done so well that we didn't need any type of venture capital funding or anything. And so we launched a platform. The problem is that I was used to crypto, which was just completely global, no borders, no one cared where anyone was from. And our registration only allowed us to raise finance from UK investors for UK companies. Now, you've got to remember at the time, people didn't really understand what Bitcoin was, let alone a crypto or Bitcoin company. So if you're trying to raise a funding round, and this is the days before ICOs, now the numbers are so big, but back then to raise $1 million was really hard work. And so a lot of in order to expand that, in order to have that opportunity where we could fund the financial fintech companies and the crypto companies, we had to put together a global structure because there just simply wasn't enough companies in the UK and there wasn't enough investors in the UK. And really the inspiration behind Bank to the Future was I wanted to invest in the entire industry, but I didn't know which companies were going to succeed or fail. When I wrote the book, Bank to the Future, I forecasted that fintech companies were going to disrupt every area of banking and finance, and that Bitcoin, the protocol, was becoming more and more significant. But I didn't know which companies would succeed, which ones would fail, and I wanted to diversify wide. So my strategy was I wanted to use the platform in order to build a completely diversified portfolio and just focus on fintech and financial innovation. So round about this time, it was 2015, I decided we needed to, our board decided we needed a more global structure. So we deregistered in the UK, registered with the Cayman Islands Monetary Authority, we relocated to Hong Kong and started building relationships across Asia, where a lot of the mining and everything was happening. And then we had a global platform. It took us, it took us a lot less time than it did. And BnkToTheFuture.com was born. So we did about 100 different funding rounds over the years. And we were fortunate enough to gain equity in many of the companies when it wasn't so valuable and no one wanted to invest. So, we sat on quite a few unicorns that people invested in through BnkToTheFuture.com. The only way we could do the global structure was you couldn't really do the crowdfunding model globally. You had to have qualifying investors and comply with securities laws in multiple jurisdictions. So we set about looking at all the different types of exemptions, all the securities laws around all different jurisdictions, and building custom onboarding process. We're into like a 7-year process here at this stage. In the meantime, ICOs came along and did exactly what we originally thought we could do. They created fully crowdsourced, fully democratized, global way of investing in early stage companies via a token offering. And it really fulfilled the goal. So we started investing in a lot of those, and like Ethereum and Storage and MadeSafe and Factom. And we created a platform whereby you could invest in these token sales, but in compliance with securities laws. And so while we were really on board with investing in the decentralization, and if the decentralized movement took down the regulated movement, then we were fully invested. But we actually believed that a lot of decentralized companies will need to comply with securities laws. And so everything we sold on the platform was in compliance as far as we could with international securities laws. But later, as 2017, as the regulators started to actually clamp down, as the ICO market became bigger than the venture capital market and started to actually, touch upon the IPO market, and as more and more IPOs were starting to actually, public companies were starting to launch tokens and look at ICOs, the regulators realized if we continue and if we allow this path to continue, this is going to be the downfall of everything we've done over the decades. All of our public companies are going to start delisting. They're going to raise money in the unregulated ICO markets. People are going to start buying out banks and financial institutions with money that they raised from ICOs. And Bitcoin is going to be taking more and more of the money outside of the traditional financial system. So in 2017, they had to get hold of it. And so rather than ignore it, countries really set their policies. Like China decided just to ban exchanges, which was a very foolish move. They'll reverse, I'm sure, because now they gave all the data that they could have had to Korea and Singapore and Japan. And then Japan started to try and look at Bitcoin as legal tender and regulate this and try and get hold of the data. And then you had countries in the middle, like small jurisdictions, that were looking at, wow, this is the disruption of the US dollar, Wall Street, Silicon Valley. We'd like a piece of that. We'll take all the jobs. And so they started to create custom, laws and legislations to take advantage of the opportunity. Bankers started leaving banks and working in blockchain. We got double-digit growth of employment in the industry. We got the next unicorns all being created in this industry. Don't get me wrong, we got lots of scams, lots of problems, and lots of things to solve. But this is where all the jobs are, and this is where everything's happening. And the country's policies, how they adjust to that, is actually going to determine, I believe, their political futures. And so, yeah, the final little stage. Sorry for long answers, but I hope it's is relevant to what your question was.
Absolutely.
But the final stage of Bank to the Future now is that we're looking at launching. So we did a token ourselves. So we launched the Bank to the Future token. We waited for what we believe was the right regulatory environment to do this in compliance with securities laws. So we raised 33 million for our token. We sold it as a security through our platform, but we maintained the utility of the token because it's used as a membership token. So the way that we launched our token right now and the utility of it is that anyone that's a member of BnkToTheFuture.com And if they own 10,000 BFT, if they deposit it to the BnkToTheFuture.com platform, we have a problem in that we don't take that many deals. We get about 30 applications. We launch approximately 2 a month. 30 applications a day, and then we launch about 2 a month. But when we pick one, often, sometimes it doesn't, but often it sells out very quickly. So anyone that's a member that owns our token, that deposits into the platform, gets priority access to deals. And the other thing we're quite excited about is we use it as a rewards token. Those who help us with due diligence, investor relations, and create a more transparent market by providing information, they will be able to get rewarded with this token if they own 10,000 BFT. And the final thing that we're really excited about is in October this year, we're looking at launching our secondary market. So because we picked up equity that you just can't get hold of anymore, we have the ability to allow people to buy and sell their equity. We've been working on the compliance technology for that. And anyone that owns the BF token will get discounted trading fees, and we can open up some of our previous equity investments to new investors. And we're really working on that challenge around transparency of information, using the BF token as a mechanism to do that. It's a big challenge that we've got ahead. And then I think next year will be the year of the securities token exchange that we'll launch, and being able to allow people to take some of those assets in compliance with securities laws and own them on their own wallets, which is a big improvement and a real exciting innovation in the securities market outside of the Bitcoin sound money market. And so that's really the history of the company and some of the projects we're looking to be involved with now, why we launched the token and why we launched the platform in the first place.
Now, Simon, I really want to jump into Bitcoin, and I want to pick your brain and your knowledge on Bitcoin, given how long you've been in this space. Where I want to start is, what is your take with what's going on at the moment? So some factors being the changing dominance of Bitcoin. I'd love to get your thoughts on these forks and what you think, how you see these forks for the ecosystem developing. Are they a good thing? Are they a bad thing? And what's your take on the market at the moment?
Okay, so I've seen Bitcoin in those years crash 90%, 75%, and now 70%. So I was there when it crashed from $30 to $3, and I lost 90% of my paper value at the time. I've seen it crash from 1,300 with the Mt. Gox hack down to, I think it was 250, 300, I can't remember, which represented a 75% drop. And more recently, we've seen it drop from 20,000 to approximately 5,000, and we're not sure where the bottom is yet. One thing I have seen is that the most amount of technological innovation happens during those bear markets. During the bull markets, during the Mt. Gox run up to the closure bull market, during the closure of the Silk Road bull market, during the original transactions when merchant adoption was happening, bull market, and the more recent growth of the crypto market in general with the ICO boom, and realizing Bitcoin was a store of value boom. All of those, most of the companies that we're investors in, that we're shareholders of, are just absolutely inundated with support tickets, with educating the world on what Bitcoin is, with explaining questions of how you open a hardware wallet, what it means to own your own money, why you can't reset your password, and all of the challenges that come with educating the world on how to own their own money, spend their own money, and why it's sound money and an interesting proposition. And in those times, you can't get anything done. You can't build anything. You can't make any changes just because your support, some of the exchanges that we were dealing with, they had backlogs of 40,000 support tickets. Coinbase was reporting 100,000 support tickets and signups in some weeks and some days. And so those times are great for new adoption. But we always need these major corrections to shake out the people and work on the technology, because the biggest issue for both our companies and the protocol and cryptocurrencies itself is scaling. And so you need bear markets to really work on the technological innovation and the scaling solutions so that we can scale this to be able to cater for, whatever user cases are coming through. And so right now we're in another one of those healthy bear markets. Unfortunately, there's nothing we can do about this, but you always have people that, just going to put my notifications off. You always have people that board at the top and sell at the bottom. And it's more about, we need to educate those people that they firstly need to store their own money on their own hardware wallets. They need to learn how to do that. And sound money is something that is going to require a few years for you to hold. And 90% of people that speculate and try and call tops and bottoms are going to lose all their money to the 10% of insiders that have inside information at these exchanges and have the ability to manipulate at the expense of the 90% that are trying to call tops and bottoms. But if you're a long-term investor and holder and believer in the industry, then you're going to have a few years to learn how this industry works, what the importance of it is, how you can store your own private keys, and how you can take self-sovereign money and understand the true benefits of that. That just takes a while. And most people need to get burnt before they actually learn that and go back in. But then the bear market is where you have real technological innovation. And we're looking at the market right now is I think we are at the same stage that we were during the Mt. Gox post period. And that was a really painful time when we were trying to evangelize for cryptocurrency. We were trying to explain the benefits of sound money, but it just looked like a pump and dump scheme, and the price was just steadily going down. And we were in a prolonged, I think it was approximately a year and a half until we hit the bull market again. We're now 7 months into this bear market. We had a parabolic bubble based upon fear of missing out and the world learning about the cryptocurrency industry, and a lot of new players and new money entering the industry globally. So we're back there again. I wouldn't be surprised if we had a sideways market. I would have expected two things from this bear market. Either we did what we've done in the past, which is where you have a catastrophic collapse of 90% of the value, shake out all of the non-believers and fearers, and then you have a ginormous bull market that follows. Now, that didn't happen. Instead, we had quite large drops followed by sideways markets and lower, followed by quite large drops followed by sideways markets and lower. And so I get the feeling that we're in that 2014 phase that we were after the Mt. Gox hack. So we could have another 6 months here. It's a great time for people to actually getting paid in Bitcoin, because obviously if you're pricing your labor and work in dollars or traditional fiat currency, then while the price of Bitcoin is low, that means you get more Bitcoin ready for the bull market. So these times are really good, which are going to reward the savers and punish the speculators. In the long term is my belief about where this actually goes, because the reality is there's only ever going to be 21 million Bitcoins. Each year it gets more useful to more people. The traditional financial market creates more and more people for people to want to use Bitcoin when they censor your transactions or they mess up, like in Cyprus when they do a bail-in, in Greece when they close the ATMs, in India when they close your savings and make you queue outside a bank, risking your money because you've got to exchange it and put it in the bank and risk getting killed. And as cash becomes illegal around the world, as Donald Trump becomes president and 25% of the Mexican peso loses its value, as UK decides to Brexit and the people holding pounds lose 25% of their value, more and more people realize the value of owning your own money, spending your own money, and having a sound monetary policy that is independent of politics. And more fund managers are starting to realize that as solutions go for them. So we're at that phase, and that's what the bear market does. But the cold hard reality of my investment thesis is there will always be an opportunity to accumulate undervalued Bitcoin as long as the world still thinks that it's a fraud, a Ponzi scheme, a currency for drug dealers, or a scam. As long as you still hear people saying that, as long as Jamie Dimon calls it a fraud, as long as the Wall Street Journal still thinks it's a Ponzi scheme, as long as Warren Buffett says that it's built out of, there's nothing to it, as long as the world still thinks those things, then you have an opportunity to accumulate undervalued Bitcoin. Once the world realizes that this is sound money, there's a fixed money supply, it's our best shot of sound money that we've ever seen, and central banks are going to need to accumulate it in the future. At that stage, once the whole world accepts it and realizes it, I don't think there'll be any more increasing value in Bitcoin, and it would just be a stable money supply, and has a shot at that chance of being a currency and medium of exchange that people actually spend without volatility. Bitcoin is a really bad medium of exchange where there's no censorship, because when you're pricing things in dollars and spending them in Bitcoin, you could end up going bankrupt if you're in a third world country because you can't afford your rent, or you just can't manage things like buying a large house because you have to be a currency speculator because the world's still pricing and thinking in fiat. And so what happens is it gravitates towards a store of value where people realize, because of its fixed money supply, I might as well spend my crap money, which is dollars, pounds, which are really good for spending but very bad for saving, and then take my cryptocurrency like Bitcoin and use it for saving and not spend it. And that's why we gradually transition, because of Gresham's law, towards people saving it rather than spending it. Once you have stable values, which is the day that happens is when the world doesn't think it's a Ponzi scheme, just a currency for drug dealers, a fraud or a scam, then you might have stability, deep liquidity, and it can be used as a medium of exchange, which is really ties in to the scaling debate that we're at right now. And we're at a very healthy stage right now because for years, we have been debating how to scale Bitcoin. There's a problem. Bitcoin is decentralized, and therefore making changes is very hard. If you had a centralized currency like many of the altcoins, then it's very easy to make changes. It's very easy to get consensus, to get the business community, the developers, the miners, and everyone and the users to agree on a change, implement the change, reach consensus. But Bitcoin truly is decentralized. The miners don't have the same interest as the developers. The developers don't have the same interest as the businesses. The businesses don't have the same interest as the users. We saw that over the last 2 years. The miners tried to control Bitcoin and make changes that were appropriate for them. The developers said no. There was centralization in mining, but they couldn't get their way because the whole network was decentralized. People complained that some of the developers were too influential and taking control, and it was more centralized. But the developers couldn't get their way because they had to persuade all the users and the businesses and the miners to do what they wanted to do, and it took them years to get any changes in. And then the businesses all colluded and said, well, we want SegWit 2x, we want both this solution and that solution. They colluded at a conference, and they all came together and said, we're going to create this new version. And because they couldn't get consensus, they couldn't get their way, because the users fought against them and created this thing. I don't want to go into the geeky terms, but this thing called a user-activated hard fork. And so therefore, Bitcoin has proven the test of time that it is the only thing that can't be manipulated, changed, and controlled and taken down by a group or a force of people because of that. And so that was really proven, but that caused a lot of problems because there was disagreement on how to scale this so that we could take, many more hundreds of thousands of users and transactions. And so really last year we reached that healthy phase where the community split. There was two ideas about how to really get Bitcoin to scale. One was to leave the protocol layer unchanged, but implement some additional scaling solutions that meant that you could take things off the original chain. And the other side said, well, we want to just increase the capacity of the chain and keep everything on the Bitcoin blockchain. Those communities split, and we now get to actually see which is the right scaling solution. But the one thing that my personal opinion, and I've debated Roger Ver and others on that side of the camp around this, is that there is only one decentralized sound money chain, which is BTC. And if it turns out that big blocks are the right way of scaling, then I hope that that can still happen on the only chain that is decentralized. If it turns out that the roadmap that they went through with Lightning Network and off-chain scaling is the right way, then they're on that path already. So, but you know, and so that's kind of the state of affairs right now. Then you compare it with things like Ethereum. Ethereum is not sound money. It never was meant to be sound money. It was never designed to be sound money. So it doesn't compete with Bitcoin. Bitcoin is trying to be sound money. It's more disruption in central banking, retail banking, and global international transactions. Ethereum, it turned out that this invention of smart contract was, to me, in my personal opinion, the impact that this technology has is all in the financial industry, all in fintech. And Ethereum turned out to be disruption in capital markets, venture capital model, opening up Silicon Valley geographical focus funding to global funding all around the world, disruption in IPO markets, whereby rather than you floating your company just on the London Stock Exchange or the New York Stock Exchange or the Tokyo Stock Exchange or the Shanghai Stock Exchange, rather than creating a haloed monopoly, you actually create a protocol level security or token, and that is global and can go from one exchange to the other exchange, and the user can take it off the exchange and own it as they wish. That innovation is significant for derivatives products, for securities, and it created a brand new market called the utility token, where you could use the token, get involved in a network. So, for example, Telegram was one of the token sales that we supported on Bank to the Future. And, Telegram creates a network, and those that actually use the token, those that actually put, which is a really, really disruptive concept. And the interesting thing about Telegram is that they raised money in the regulated markets with US dollars. So, $1.7 billion was invested. It all came from institutions in USD. The really interesting thing about these regulated ICOs or securities tokens or whatever they become in the future, and the things that we're doing at Bank to the Future, is that you end up putting dollars in. Once dollars hits the crypto market, because of the friction around having to convert that back and having to create a taxable event and all that stuff, it tends to stay in crypto, which is why the market cap of crypto, give or take the bear markets, tends to expand and expand and expand, because getting out of fiat back into crypto is a big friction point. And so people tend to keep it in fiat, in crypto, sorry. And then you have innovations like stable coins, which allow you to keep it in crypto, but get the benefit of the stability of the dollar or the pound or whatever you want to do. So these financial contracts and products are really making significant impact in terms of taking away the significance of the dollar as a global world reserve currency, taking away the geographical focus of Wall Street and London Stock Exchange and these larger financial capitals, and taking away the geographical focus of things like Silicon Valley, where you are only opened up to funding if you're born in a certain area, move to a certain area, live in a certain area, have the right skin color, have the right sexual preference, and then that opens up to everybody in the world, and you have global competition. So I believe the end result of this entire crypto market is that you will have completely unregulated market and completely regulated markets competing with each other. And these unregulated markets make the regulated markets more honest as well. In a sense, Bitcoin, to me, the crypto market regulates the regulator. No one knows who regulates the regulator, but when there's competition, when people can take their dollar and buy Bitcoin, they have to treat the dollar better in order to stop people taking all their savings out into Bitcoin, and stock markets and bond markets and everything. And so this is what I think the end game is, that we're creating these two-tiered markets, massive disruption, And at the end of the day, governments and regulators are going to have to be more honest and improve the user experience as a result of people being able to exit out of the traditional financial system. Huge answer, huge lot of topics there, but I hope it gives you an overview of why I think this is one of the most exciting times in financial history. And by the way, we are miles away from that actually being done, but all the foundation has been laid, which is why I think there's so much undervalued in this industry amongst all the scams and Ponzi schemes and problems.
I love it. I appreciate the answer, and I know the audience just got so much valuable information from that, Simon. I certainly really appreciate it. There's no value I can add to that, but I will just comment on the Bitcoin scaling, having looked into both of those issues myself, well, not issues, but both of those problems myself, and I encourage other people to do too. I find it particularly fascinating looking at the Lightning Network and then looking at increasing the block size and the potential feasibility issues with operating a node and hard drive space with increasing the block size in the years to come, and then the layer 2 scaling solution with the Lightning Network. I think it's quite technical, but it's really, really interesting stuff. Now, mate, look, you've ripped through all these questions and added so much extra value to this chat. Again, really appreciate it. What I'd like to finish with is, do you have any advice for, say, someone coming into the cryptocurrencies right now, both in terms of technology and the economics as well? What would you say to them?
So I think the first thing is to just understand the economics of Bitcoin itself. And everything else it can get pretty complicated. It can be pretty hard to detect a scam from something legitimate. And then there's also things which are perfectly legitimate, but they've got completely unrealistic expectations because everything we're doing in this industry is for the first time anyway. So I think the first place for someone to start is just understand the economics of Bitcoin. And it's pretty simple. I created a video, just Google the economics of Bitcoin. And I think that does a good job of explaining it. Once you understand that the true innovation here is giving you the ability to own your own money because the money you have in a bank is not yours, to spend your own money because the money at a bank, once you start to accumulate wealth, they will tell you whether you're allowed to spend it or not, and they will censor it. And also the benefits of having a sound monetary policy where the supply is fixed and it can't be changed, and the only way you can, and it encourages an economy based upon savings rather than debt. And so I encourage people to look at the economics. You take your opinion about whether you think that economic argument makes sense. And then I would encourage people to accept some of their wages if they can in Bitcoin, or accumulate some Bitcoin as a small percentage of what they bring in. Once they become more comfortable with it, you might do that in a way where you just replicate the banking system. You go to a company like Coinbase, which is very easy to use, but unfortunately they own your Bitcoin. They can spend your Bitcoin if they choose, and they might be engaged in multiplying the supply of Bitcoin because it's not transparent on their exchange. So it recreates banking. If you go that route, because it's easy, your next job is to get a hardware wallet and learn how to secure your own Bitcoin and get the Bitcoin off that exchange and into your own wallet. Once you know how to do that process, once you understand the benefit of owning your own money, being able to spend it when you wish, and benefiting from the fact that it's a fixed money supply, and it rewards the saver over a few years, then with some of that wealth, you might want to diversify that and start looking at more interesting things like deals on BnkToTheFuture.com, token sales, securities tokens, and see the benefit of actually moving that crypto around, entering the crypto economy. And then you might want to start, as if your wealth grows there, as it has done for a lot of people. Obviously, the future is not a predictor of the past, but if this industry goes on to make a lot of the disruption that I think it will make, and really, you should only be playing with money that you can afford to lose, because this is either going to be the disruption of many things, or it's just going to be worth nothing. And really, it's a two-tier bet. Now, there might be lots of speculation and ups and downs in between, but if you're taking a 5-year, 10-year time frame on this, then I think you should look at that as the replacement of what your pension, which is a real Ponzi scheme, and as does have liabilities that they can't meet. And while those are two different things, and you obviously need to manage risk and take this with a pinch of salt, I think everybody should be hedging against the traditional financial products, the traditional financial system, and recognize that actually the 2008 highlighted some fundamental flaws in our financial system, and none of those have been fixed. All they were done is the government, the banks, the regulators, the central banks kicked the can down the road a little bit further. They solved the problem of too much debt with more debt. And so we have that black swan event to come soon. I would encourage people not to wait for that black swan event when everyone's trying to buy Bitcoin because they realize that there's issues in traditional finance, that you should take the next couple of years and hope that you've got the couple of years to really get your head around what it's like to own your own money, spend your own money, and have an economy based upon savings rather than debt. So that when we do have big problems in our financial system, and the government needs to figure out the next way that they're going to perpetuate the Ponzi scheme of traditional money, then you are actually prepared, and you know how to use this, and you're not starting that education from scratch. Everything that I said could not happen. This is a thesis that I started investing into in 2006. And I believe that the next 20 years are going to be the most interesting years in financial history. There's going to be lots of change. So the only thing that you can do is accept that there will be lots of change ahead, prepare for change, and be willing to learn as things that you thought might have been right or might have been right turn out to be wrong.
Simon, you're an absolute gentleman. So appreciate your time. Guys, you're hearing this from one of the few people that has been in this space for this long. So, really take this information on board. I would encourage you to watch this interview again. We don't often get the opportunity to speak with someone as knowledgeable as Simon, who's been around in this space for so long. Simon, a huge thanks from me again, mate. Before we finish up, is there anywhere people can follow you on social media? Is there any websites you'd like to mention? I'll put links down in the description for everyone.
Sure, yeah. Firstly, I'd just like to say that education is one of the most important parts of our industry. So I condemn your work and everything you're doing to educate people. It's a really, really valuable and important part of our industry. In terms of me, obviously, in terms of business, BnkToTheFuture.com is where we list all the things that we're investing in. BF token is our token. And in terms of getting me, I'm most active on Twitter. My Twitter handle is @SimonDixonTwit, because when I signed up, @SimonDixon was taken, and I started getting followers with @SimonDixonTwit before I could change it, and so it's stuck. So that is my Twitter's where you can grab me the most.
Awesome. Again, guys, links in the description. You don't have to go and search for it. Get down there. Make sure you follow Simon. Simon, thanks again. You're welcome back anytime.
Awesome. Thank you.
Thanks, mate. See you guys.